Good morning, everyone. Thank you very much for coming to this short talk on the Kivalis project. I'm very happy to see a few friendly faces, but also a lot of new ones. Today, I want to let you know a little bit about what we are thinking. My name is Ernesto. I am originally from El Salvador, but I've been working in Germany since 10 years. Recently switched from a bank to Kivalis. I am head of strategy and DeFi. My background is actually also on DeFi, so I don't really consider myself a banker. And what we are trying to do at Kivalis is basically to issue an open design euro stablecoin backed by 12 banks. Why? Because when you look at what's going on in DeFi today, you see that the euro is basically invisible, right? So you could say, sure, Circle has like 800 million TVL on their Euro C stablecoin, but if you compare it to the US dollar stablecoins, that's basically nothing, right? So we think we as Europe should have a presence in the fastest growing economy in the world, which is the digital economy. The banks in our consortium all agree that the world is going to move on-chain. We think that in the future, non-DeFi people, normal people, will also start using on-chain services, but maybe they will not know about it because it's going to be underpinning, the banking apps, the savings apps, and so on. So if you believe that thesis, then obviously this is a huge problem if the euro has basically zero presence, because this makes us very, dependent from American power. We have nothing against the US, of course. But we want to see a strong Europe, which means we also need to have a strong presence on DeFi. Why do we think that DeFi should even care about us? I mean, we are quite humble and we know that, we are banks, so obviously there has to be a gap to be closed between us and the ecosystem. When we talk at DeFi protocols and we have very open discussions with them, we mention always this concentration problem that you have basically too much USD presence, which means when Donald Trump has a bad day and decides to start a war somewhere, right? So this becomes an issue for the risk parameters of, for example, lending protocols or in general, DeFi protocols. So we think it's in the best interest of the DeFi community as well to have an option other than the US dollar to build up their economic models. So far, we have heard good responses to this idea, and we hope that in the future, even more DeFi protocols see the need or get access to this euro alternative to the dollar. The other thing we are seeing is the regulatory tailwinds. So you probably have heard in the past that the central bank in Europe has been a little bit against stablecoins. We are having very honest discussions with them about this because we don't 100% agree that there has to be either a centralized option or stablecoins. We think both can live together. Hopefully they interact with each other, but of course there has to be a lot of work for that to happen. But the good news is that the regulators, the banks, the central banks, they all are staffed by very smart people. And they are open to these discussions. They don't have any prejudice, so this gives us a little bit of certainty that this is not going to become a problem in the future, and that we can work together. And we think this gap is an opportunity for builders. So if you think about what does it mean that we want to build an ecosystem, then obviously there's a big opportunity for people to create new protocols on top of this. So who is Kivalis? We are not a bank, we are a consortium, so we are a completely independent company. We are set up as an e-money institute in Amsterdam, which is owned today by 12 banks. But as I said, this is an open design, so more banks are in dialogue to join us. We are happy that we have all major European banks already, European countries represented as part of our shareholder circle. And we are now expanding to even more countries. So hopefully by the time we go live, we will have basically the entire European Union as part of our consortium, which will be quite amazing if you think about distribution and so on. I don't think there are so many stablecoins out there who can say they have each bank in Europe as part of the consortium. So we plan to go live by the time we get our EMT license, which hopefully is coming on the second half of this year, depending, on how the process goes. And the value proposition that we are bringing, or why are banks even, joining this, is because we think in order for the euro to actually have a chance to be used in DeFi or in general in the digital ecosystem, it needs really deep liquidity, which is why all of these banks are supporting us with this. We are going to launch, with all major players. Obviously, ETH is one of them. And we think that by having this very deep liquidity, we can ensure that builders, can deploy their own ideas on top of this. What does this mean? This means our token is, it has compliance functions, of course. It's an ERC20F, so in principle, anyone can use it, but obviously we have some compliance functions on top of it. It's as open as it can be while being compliant. And this is where we think the demand is going to be in the beginning. So we are working with the biggest decentralized exchanges and also centralized exchanges in the world. We are going to establish deep liquidity against the US dollar and also against ETH, wrapped Bitcoin obviously as well. And depending on how we see the ecosystem developing, we will also introduce even more pairs. We are going to have ultra low slippage pools, special pools, on the major AMMs. We are talking about having facilities for RFQs or other prop AMM technologies, so that right from the start you could swap big amounts of USDC or whatever towards the euro. We are working with the major lending protocols as well, because we see demand there for institutional grade liquidity. So the US dollar to euro carry trade is a very interesting proposition for many people. And we are also optimizing lending vaults, for isolated markets. So this means, for example, institutional tokenized assets can be used as collateral. And we think at least some banks in our consortium are going to start experimenting with this, because it's a very interesting idea to, have a way for banks to kind of have an on-chain repo facility, which is kind of non-existent today. We think DeFi as the engine for what we try to achieve. We don't think this is a side project. So DeFi is very important for us. First, we want to have deep liquidity on global exchanges, as I mentioned, because we think that's going to be a big distribution channel. We are present in Asia. We are going to launch also in Latin America, in Africa, of course. Because we also think it makes no sense for us to try to replace SEPA Instant or other payment protocols in Europe. We think the euro demand is global, so that's why we're going a bit more aggressive into those markets. We're going to see liquidity at decentralized exchanges via market makers. As I said, also some special pools for even deeper liquidity for institutional grade transactions. We are going to activate on different lending protocols as much as we can, of course. We think there will be a time where you probably have small markets or limited collateral possibilities, but this is going to expand in the future. We are also talking to some yield protocols in terms of using collateral, tokenized collateral from our banks, or perhaps tokenized credit or some other interesting products to provide yield, so native euro yield. This is going to be open to anyone, so I think it's quite an interesting thing for people who think the euro might be more stable than other currencies, especially with what's going on in the world. And then we intend to bring institutional volumes. So as I mentioned, we think carry trades, euro leverage facilities, and treasury diversification for corporates is going to be a big thing. But for that to happen, first we need to have deep global liquidity. And we think once we have these deeper integrations, then the banks and the asset managers of the world will see that the euro has a proven track record, it's useful, and we hope that they will start using our stablecoin as well for their own treasury operations. So DeFi is not an afterthought. It's kind of the way for us to build an ecosystem for the euro. And we actually also think in terms of institutional DeFi. So how can we integrate our banks, our asset managers into the ecosystem out there? We are not planning to, launch our own protocols. We think it's much better to work with what's out there and try to bridge a gap between TradFi and DeFi. So we see three possibilities for TradFi to leverage DeFi. One of them is, of course, the euro US dollar carry trade, leverage strategies for the euro, treasury diversification, and hopefully there will be even more ideas out there in the future. These are the three ones that we are pushing right now. And this is more or less the roadmap that we have. Once we achieve institutional familiarity, which is what I was describing previously, we see a few institutional use cases. So one of them is cross-border payments. We have quite a few global banks in our consortium, and we think it will be quite interesting for them to move money between Asia, Europe, Africa, Latin America, using a stablecoin instead of the usual rails. They see this as quite a good opportunity to become even more efficient. This is going to happen perhaps, we're going to launch on Ethereum mainnet, and we are talking to the Ethereum Foundation for solutions for privacy and also other institutional requirements that you may have for this. Then we have security settlement. There are some very interesting ideas here in Europe about, for example, having a digitally native sovereign debt, which will be super cool to have, right? Because then you can have a native reserve for the stablecoin. You could have, for example, a sovereign bond that is natively issued on Ethereum or some other chain, and have this as part of the treasury, which means then you have even more flexibility for redemptions, which is a bit of a challenge today with how stablecoins operate. And then finally, we see trade finance. Lots of corporates are asking us, okay, so how do I use this stablecoin for all of my operations globally? And for this, it also helps to have the banks, because they can be the on and off ramps in a global scale, which we think it's also quite a good USP to have as a newcomer stablecoin, right? And so we don't have to worry too much about this. And here's where we are today. So we took about 2 years to prepare this launch, because you can imagine how hard it is to sell this idea to banks. So it's been a lot of work onboarding them. We started with 9 banks. As I said, we are now 12, and we hope, or we think, we will have a few more by the time we go live later this year. And in 2027, we will actually expand to more blockchains. So we start in Ethereum mainnet for obvious reasons, but we also see the need for us to be present in other chains as well. And this is where we are in a discussion with the community and with the builders to kind of figure out, so where else should we have euro presence, with deep liquidity and so on and so forth. So that's one of the points where we think there's going to be an interesting conversation between Kivalis and the DeFi community. It's also a conversation we're having with our banks, because some of them are thinking in terms of maybe more permission chains or maybe more privacy-oriented chains, which could be L2s, could be alt L1s, so a lot of different options out there. But there has to be a way for us to coordinate all of this, right? We cannot be everywhere at the same time. So that's going to be a process that probably will take a few years to identify all the chains. And our proposition, or why we are reaching out to DeFi, is, well, as I said, it's kind of the main bridge we see between TradFi and this new economy. So we're looking forward to talk with builders to integrate in even more protocols. We're interested in decentralized exchanges, lending protocols, yield protocols. So if you're building any projects or protocols in this area, please feel free to reach out, because we're very interested in that. We're also obviously interested in institutional participants. So if you're a capital manager, treasurer, or a financial institution, feel free to reach out, because we think we have quite interesting propositions for that. Market makers and LPs, obviously also interesting, as much liquidity as we can provide via as many possible partners that we could find. It's going to be, I think, the key thing for our success. And finally, we are looking for people to help us with integration payments and settlement. Here we're not only thinking about credit card settlement, but also, for example, mobile money and some other interesting ideas that there might be out there. So if you have any friends or anyone else who is working on this, so please do reach out. Here's my contact information. As I said, please feel free to reach out whenever you want. And I do think we have a little bit of time for questions. So if you have any, please feel free to ask your question. And thank you for your time, by the way.
Thank you. Can you talk about the reserve? Where do you invest the money?
Yeah, so Mika is very concrete on where we can invest our reserve, which is, I think, is a good thing to have this very strong regulatory framework. In the beginning, it's going to be 100% cash. And in the future, as we grow the ecosystem, we will diversify this. There are very strong regulations on what we can invest. So it has to be HQLA of the highest quality possible. It has to be euro denominated. It has to have very short redemption time. So a lot of specifications out there. But we are in discussions with issuers of such HQLAs to integrate them into our reserve strategy.
Can you comment on the efforts from the European Central Bank to create a stablecoin as well? So, or some crypto money, I'm not sure what they're doing.
The digital euro, you mean?
Yes.
Okay. Yeah, well, you have two variations, right? Because you have the wholesale CBDC, which is intended for interbank settlement, and then you have the retail digital euro, which is actually not going to be on-chain, so it's a kind of a off-chain product. As I mentioned, I think that there are some complementary effects between both of them. So wholesale CBDC, for example, is something that we see as very important for once our stablecoin or euro stablecoins in general becomes systemically relevant. It will be very interesting for us to have access to that facility so that you can have your treasury in a native digital form. That's something that today is not possible yet, but we hope that we can have this conversation with the central bank as kind of a very interesting use case. And then for the retail part, well, it's quite interesting to see the central bank going directly towards the citizens and offering a kind of a deposit facility for citizens. So from that point of view, we think the market will decide probably which is the best option. We think this competition is it's out there, and we are just working for having a very good solution to what we see are real problems out there, and we hope the market will decide which option is better.
Okay, thank you.
Thank you very much for your presentation. I really like your open standard approach and that it's a consortia. But how do you see it with 19 other euro stablecoins currently being issued? So one of the major prerequisites is, of course, deep liquidity, as you pointed out. So do you see it as a challenge when everyone wants a piece of the cake, or how do you see the future of your stablecoin?
We are happy actually that there are more stablecoins out there, because you also need to defend the peg on chain, and for this you need even more assets that have the same exposition. So for us, it's good to have other options out there. If you think in terms of how big our liquidity pools are going to be, and if you think in terms of, let's say, for example, a 3-pool on Curve, or some kind of other pool on AMMs, if we were to take a very small stablecoin, they were probably going to pump their TVL like 100%. So we're happy to see there are other strong options up there, because we need strong partners for us to defend the peg of the euro on chain. So in that regard, we are very happy to see this. We do think that it's going to consolidate a little bit. I mean, we're nowhere near what's going on with the US dollar. You have like 500 US stablecoins, right? So we still have some room in Europe for a little bit more. But we think it's going to consolidate also a little bit. But for now, we are happy to have at least the option for, for these pool sets as well.
If you will be 100% in cash, how will Quivalis make money?
Well, we are not really here. I mean, and it's going to sound funny, right? But we are not really here to make money. We see ourselves as a utility, because first of all, we believe we are enablers for what banks or the European financial ecosystem wants to achieve, which is to have a presence in the digital economy, right? So the focus is not on profitability in the beginning. The focus is on first building an ecosystem, building the liquidity, building the tooling and the infrastructure for banks and the European financial industry to even have a presence at all in this market. And once that's done, as I said, we will then start diversifying. So it's a matter of first, having at least something that might be profitable before you even think about it, right? Because it makes no sense for us to think that we will become, super profitable right from this. We're not Tether, right? We are regulated. We have, yeah, of course, it will be fun to launch in El Salvador, right? And we could have interesting reserves. By the way, I'm from El Salvador, so I'm very familiar with that. So, but European regulation is a bit stronger, so we don't really think we're going to become the next Tether. There will be a little bit of money coming out, of course. According to our projections, actually, we might become profitable in 1 or 2 years. And the design of Qivalis is also to give as much dividends back to our shareholders, so our banks, because obviously they need to recover their investment. But that's not the focus today. The focus today is to build the ecosystem.
Thank you.